Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at gold, the gold miners, the junior gold miners, and then we're going to take a quick look at silver. Okay, so first up, let's look at GLD. This is the Spider Gold shares, and as you can see here, it's pulled back, okay, from hitting what looks like close to a double top here. So you can see in January it made this high on the 24th of January, and then it pulled back, it found support, and then it ran back up to that level, and it failed to actually even hit that level, and now it's pulling back, and so it's forming a essentially a double top up here. And so what it needs to do, it has to break above that high close here from January to head higher. If it fails to break that level, that's going to signal consolidation is coming. Right now it's pulling back after forming this almost doji here, and it's holding EMA 4 at 127.59. That's the key level to hold. If that breaks, then you'll have the middle Bollinger Band at 126.89 on deck. Now, if you look here at the candlestick pattern, you can see that it formed the bearish doji star reversal pattern, and so they're calling this the doji, and then so you had the multiple white candles with the gap up open with the doji forming, and then a red candle formed on Friday, and so that's confirming the reversal pattern. So you had a sell signal on Friday for Spider Gold Shares ETF. The bearish doji star reversal pattern was confirmed. It was that gap up open on Thursday, and then that set up the play, and then the doji. Whenever you get a gap up open during an uptrend and a doji or a hammer forms, the signal is to head to the sidelines if you are long. Okay, now look at GOLD. This is gold continuous contract. This is the CME. So check it out here. You've got the same pattern. It topped out here in January, and then it pulled back, found support, and then now it came back out and formed a double top. It hit that level on Friday and pulled back. A doji did form on Friday, and so it's an indecision candle. It needs to hold EMA 4. Basically, if it breaks above this red line, that signals it wants to head higher. If it drops below 1350, then you're looking at that middle Bollinger Band at 1339 is the key level to hold. Okay, now look at GDX. Okay, this is the gold miners ETF, and so if you're trading Nugget and JNUG and Dust and JDST, this is the ETF that you want to be following. And so this is the gold miner ETF, and as you can see here, it hit resistance on Thursday. Notice the red candle there formed. It had formed bearish hanging man reversal pattern on Thursday, and that pattern was confirmed on Friday. So as you can see, the signal was to short. This is a major short gold signal all the way across gold and the miners. As you can see here, this is the bearish hanging man. That is a hammer that's formed during an uptrend. Okay, after the gap up open, it sets up that just during an uptrend when you have a hammer at the top. There is that small upper wick, but this is that was the red flag. You had multiple green volume bars in a row, and then a hammer formed right at key resistance, that middle Bollinger Band, that 20-day simple moving average at 23. It has to break that level and turn it into support to head higher. Now it's dropped below all the moving averages. You have the 50, the 100, the 200, the 300, and EMA's 13, 4, and 8 all lined up here. All the moving averages that we follow are all lined up in the same zone, and Friday's close was below all those levels. So that does signal more downside risk. This could possibly pull back and retest the current lows down here at 21.6. So this is a red flag for the miners. And so take a look what happened to Nugget here. This is the gold miner bull 3 times, ticker symbol NUGT. Notice how it failed to get above 50 on RSI, and then Fasto pulled back below 50, so that the chart failed to heat up. Notice the uptick in minus DI. That's a signal the bears are taking control, with the downtick in plus DI. That's not what you want to see if you're long. This is what you want to see if you're a bear. And so this is the same thing. Notice the pattern that formed. It formed bearish doji star reversal pattern. When you have an uptrend going and a doji or a hammer forms, that's the signal to head to the sidelines. The signal has been to short short Nugget, short the gold miners. Here's the pattern, very strong pattern. You know, especially when you get that gap up open with the doji forming. You know, that's just a major reversal pattern. And so, you know, when you see this form, you know, the signal is to head to the sidelines. And notice the gap down open. You know that people were punished that held on Thursday, and then now you've got the close below EMAs 4, 8, and 13. This is totally bearish again. When was okay? So how is this Nugget chart completely bearish? And that was this candle right here when it broke below EMAs 4, 8, and 13. That's the pink, lime, and orange lines, and then it dropped below the middle Bollinger Band. And notice how all these candles here are below the pink line. You know, finally on the 12th it closed above the pink line and it started to bounce and head higher. This is what we call a short cover rally. It has to get above the middle Bollinger Band at 29.68 to get a new uptrend going. You know, this is the bearish lower Bollinger Band channel. The lower BB, the lower Bollinger Band is the bottom of the channel, and the middle Bollinger Band is the top of the channel. This just ran from the bottom of the channel to the top of the channel, but it's still in a downtrend. And now that it's closed below EMAs 4 and 8, it makes it a risk to hold long. As long as those levels turn into resistance, as long as it stays below 27, that's going to signal more downside risk, and you could see it drop all the way back down to 23 to test the recent lows. Okay, look at JNUG. This is the junior gold miner bull 3 times. And so this is under pressure as well. Notice how it dropped back below 50 on RSI. It failed to stay above that level. You have a bear cross on Fasto. Notice how the black line crossed the red line to the downside. Check out how minus DI was coming down as the bulls were heating up, but check out how it bounced back. This is a signal that the bears are still in control. When you have the red line above the black line and the green line, it's a signal the bears are in control. Look over here. Okay, so this is ADX with plus DI, minus DI over here. ADX is the black line, plus DI is the green line, minus DI is the red line. When the red line crossed over the black and the green line to the upside, that was a signal the chart was breaking down. Look what happened to the chart at this time. That was the same time that it dropped below the middle Bollinger Band, and notice how this is where the big downtrend started. So if you were following ADX here on this crossover, that was your signal to go to the sidelines, and look, it predicted it precisely, and then it came back up, and as it was bouncing down here, it started getting close to coming back over. If this crossed over, it was the signal that the bears or bulls, you know, the bears were cooling down and the bulls were heating back up, and if you're a bull, you were wanting to see that green line cross back over. The movement that happened on Friday was a red flag, and so now it's back below EMAs 4, 8, and 13. Notice that bearish close down here. If that 1450 level turns into resistance, you know, you could see a drop all the way back into the 12s. You know, it's always a risk to hold long if a candle's forming below EMA 4 on the daily chart. It has to get above the middle Bollinger Band at 1564 to get a new uptrend going. You know, you have the 50 and 100-day simple moving averages there, so there's a lot of work to do. It stalled out at that 16 resistance level, right where that 50-day simple moving average is at. Okay, so yeah, so JNUG and Nugget and GDX and GOLD and GLD are all bearish and they're all heading lower. So what do you do? Okay, well, this is the beautiful thing about the ETFs. It doesn't matter about, you know, whether or not you're a bull or a bear or you're long or you're short, in my opinion. All it matters is that you're right, that you're on the right side of the trade. And so it doesn't pay to be, you know, overly bullish or overly bearish. It pays to be nimble and to be able to jump back and forth depending on what the charts say. Who cares? You know, like if you're a gold bear or gold bug or a bear, or, you know, all that really matters, are you making money? And how do you make money when gold is dropping? You play dust. You know, dust and JDST are the two ways to play gold. This is the gold miner bear ETF, and so this is the 3 times, and as you can see down here, it formed a bullish Harami cross reversal pattern. So it formed a bullish pattern on Thursday. Okay, so while Nugget formed the bearish doji star, you've got dust here, the inverse, forming the bullish Harami cross, and so this is a strong reversal pattern. It's trying to confirm that pattern right now. What happened was the Friday's candle, you notice how it didn't get more than halfway. It needed to close halfway above the midpoint of this red candle, and it didn't. So it's still trying to confirm this previous reversal pattern, but the movement on Friday is signaling more upside potential. Now it is hitting key resistance levels, and it failed to break above this 100-day simple moving average, and there's EMAs 4, 8, and 13, and the 50-day simple moving average all lined up here. And so on Tuesday, above 25, if you can get above 25.21, that gold line, that's going to signal more upside. And then you're looking at the 200-day simple moving average at 26.20 at 26.69 is the big level to break. You know, you want to see it close above like this, and that would lead to a run up to that $30 resistance zone where the 300-day simple moving average is at. If it fails to break 25, that's going to be a red flag. And then if it closes below 24, dust will no longer be in play. So if you're trying to play dust, you know, the good thing to do, or a smart thing to do, would be to have 24 as your mental stop loss level, and just don't hold on overnight if it drops below 24. That would mean the plays that it's no longer in play. But if it holds 24 and breaks out above 25, that's where you could see it run higher. Okay, look at JDST. This is the junior gold miner bear 3 times, and so this is heating up as well. Notice how it had the bullish crossover on Fasto. The black line crossed the red line to the upside, and now it's back above 20. You want to see RSI above 50 if you're a bull, and notice how there's a bullish crossover on ADX. Check out how the green line crossed the black line to the upside. You have the green line above the black and the red lines. This is all signaling the chart's heating up. Now this formed bullish doji star reversal pattern, and that pattern was confirmed on Friday. So like the signal says, let's jump on this white horse. You know, the pattern was confirmed, and so, you know, this is a really strong pattern. When you have a downtrend and the stock's pulling back, the setup is the gap down open, and then when you have the gap down open in either a doji or a hammer forms, that's your signal to jump in for a long trade. And so people that jumped in on Thursday were rewarded on Friday. Look at the big gap open and the run higher. This doji signaled the bounce, a pullback, gap down open doji. It was a beautiful setup on Thursday, and bam, paid off nicely. So now it has to hold up above the middle Bollinger Band at 54.43, 54.23. If it can stay above 54, it's going to remain in play. Now it has work to do. It has that EMA's 4, 8, and 13, and then the 50-day simple moving average, the 100-day simple moving average, and the 200-day simple moving average. So basically, if you can get above this 56 level, and then it's 57.85, and then 61.50, you know, it has a lot of work to do to get an uptrend going, but keep an eye on it. You know, if it can hold 54, it remains in play. If it drops below 54, that'll mean that this was just a short cover rally and it's not ready to go. In order to get the uptrend going, it has to be like this candle on January 29th. Notice how back here in December there was a close below the dotted purple line, which is the middle Bollinger Band, and also the 20-day simple moving average. That signaled the downtrend. Look how the candles failed to close above that dotted purple line until this day right here, and that's signaled the start of the uptrend. Now you had a pullback all the way below the middle Bollinger Band again, and now for the first time you have a close back above. So is it going to get another uptrend going? It all depends on that dotted purple line and whether or not support holds. Okay, look at SLV. All right, so this is silver. We'll finish up with a little silver here, and so yeah, just like gold, silver's been under pressure. Notice how it failed to get above 50 on RSI. It failed to get above 50, you know, stay above 50 on Fasto, and then you have the bear cross there. Notice how you have the red line above the green and the black lines. You know, those are signals that the the bulls are not in control. And so what happened here as it came up and it hit that middle Bollinger Band, and it formed the bearish Harami cross reversal pattern, okay? And that pattern was confirmed on Friday. So the signal came out on Friday to short silver. You know, that's what the candlestick pattern it called. You know, this isn't me. This is the candlestick pattern. I'm just the messenger. I'm just relaying the information. All I'm doing is reading the charts and just relaying the information. So yeah, I'm just trying to help people. So always keep that in mind when I make these videos. That's where I'm coming from, is just trying to help. And so the middle Bollinger Band here needs to break to get a new uptrend going at 1592. So if it stays below this 1590 zone, that's going to be a red flag. Notice it closed back below EMA's 4, 8, 13, the 150 and 200-day simple moving averages. The close below all those levels is not what bulls wanted to see. That could lead to a drop back down to 1540. If 1540 breaks, you could see a drop all the way back down to test this double bottom. This isn't a downtrend right now. You know, the downtrend started on this candle right here with the close below the middle Bollinger Band, and so, you know, until it gets back above that middle Bollinger Band, that 20-day simple moving average, and turns it into support, there is going to be more downside risk. Okay, so since silver is a piece of junk right now, and you should stay away from it, what should you buy instead? And I say take a look at DSLV. Okay, 3 times inverse silver. Okay, and keep in mind, you know, we follow the charts. You know, all this could change in a heartbeat. You just have to follow the charts, and if they follow through, and the bear ETFs follow through and they get an uptrend going, that's your signal you want to ride. If they stall out and then you get a reverse on the gold stocks, you know, that's going to be a signal that this wasn't a strong move by dust, because as you can see here, they're going to have to follow through here for dust and JDST. You know, they're trying to bounce, but they have to follow through, so they could stall out. You know, the same thing with JNUG and NUGT. You know, they have to follow through. It's signaling right now that it's leaning towards the bears are winning, and that you could see more downside movement for gold and silver and some upside movement for the bear ETFs. That's how it's set up on Friday. We just have to see how it falls through next week. Okay, so just keep that in mind, that we don't take any hard stance on anything. We flow. We're like the river. We're just constantly changing with whatever the market gives us. We're just trying to capitalize on whatever the market throws out there. We're not trying to take a position, like a personal stance on anything. We're just trying to profit. That's all we're concerned about. And so if you look here on RSI and Fasto, you can see they're both above 50 on DSLV. This is the 3 times inverse silver ETN. And so, you know, it's trying to bounce down here. It formed the bullish Harami cross reversal pattern on Thursday, and that pattern was confirmed on Friday. So the candlestick pattern is that this is a bullish play and a bullish move. But when you look at the charts, you know, that's nice with the candlestick pattern, but look at all the resistance it has to get through. You have the 200, the 300, the 50, and the 100-day simple moving averages, and EMAs 4, 8, and 13. It closed just above EMA 13 and above EMA 4, but as you can see, there's 1, 2, 3, 4, 5 key resistance levels that it has to break, and it has to hold 24 to remain in play. So it's not, the coast isn't clear on these bear ETFs. They have to follow through. And so, you know, just keep an eye. This is a very interesting place for all the charts that I just showed you. You know, you could see a major change here where the bear ETFs heat up and the bull ones really cool down, or this could have been a head fake on Friday and they could reverse. We have to see how they fall through. Right now it's leaning towards the bear ETFs, but you know, for DSLV, if you're looking to play, I would just, and you're not in right now, I would just wait for a break above that 200-day simple moving average and see if it breaks resistance before trying to enter long. If you enter before, you know, you could get stuck because it has to break resistance. You always want to either load off support, which this would have been a nice load off the bottom here for a quick trade, or you want to load on the break above resistance. You know, trading in between where there's resistance levels can be a risky place to trade. It's always better when you have a clear picture where the share price is headed. Since these are key resistance levels, a break above might be the safer time to enter. Because if it stalls out here and it pulls back below 24, then this bear, you know, the bearish play on silver will be off the table. It has to stay above 24 to remain in play. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com or YouTube channel at mychartcoach.com. Check out our chat. I'll post the link below the video. Thank you.